Most investors are still trying to make short-term rentals work in Phoenix, but with oversaturation, lower margins, and higher burnout, a smarter pivot right now is midterm rentals, especially if you want consistent income and fewer headaches. This video is your step-by-step guide to analyzing a midterm rental deal in Phoenix, even if you're not a spreadsheet person, even if you've never run numbers before, and even if you've been burned by STRs. Midterm rentals, or MTRs, are furnished rentals leased for 30 days or more. They serve guests like traveling nurses, corporate relocation, insurance displacement, and contract workers. They're not just a backup plan for failed Airbnbs. They're a total different strategy. And right now in Phoenix, they're outperforming short-term rentals in reliability, guest quality, and operational ease. If you're holding a property that's struggling as an STR, or you're looking to buy something that's cash flows without a crazy amount of work, you're going to want to learn how to underwrite this the right way. Let's dive into exactly how I analyze MTRs for my investor clients in plain English. Step 1, estimate your monthly MTR income. First, we need to estimate how much monthly rent your MTR can bring in. A good starting point is looking at comps. In Phoenix, here's what I'm seeing as of 2025. A well-furnished 3-bed, 2-bath in South Chandler near Intel, about $3,800 a month. A clean 2-bed condo near Banner Desert or downtown Phoenix, around $3,000 to $3,400 a month. A 1-bedroom apartment in Tempe or Scottsdale with updated finishes, $2,500 to $2,900 a month. High-end homes near Mayo or Biltmore, $4,500 to $6,000 a month. How do you find these comps? Use Furnished Finders and search by zip code. Check 30-plus day listings on Airbnb. Look at Facebook groups for travel nurses or corporate housing. Ask other local investors or property management what their MTRs are earning. Important, compare apples to apples. Match bed, bath count, size, finishes, amenities, and location. Let's say you're buying a 2-bed, 2-bath townhome in Tempe and your market comp shows $3,600 a month for a similar furnished unit. That's your projected monthly income. Now, step 2, estimate your monthly operating expenses. Now, let's break down what it will cost you to run this rental each month. Typically, monthly expenses include your mortgage payment, which is your principal and interest. So let's assume $2,100 a month. Property taxes, roughly $2,400 a year, equals $200 a month. Insurance, you need landlord plus contents, $100 a month. Utilities, think electric, water, sewer, trash, around $350 a month. Internet, $70 a month. HOA, if any, say $120 a month. Repairs and maintenance reserves, $200 a month. And furnishing depreciation reserve of $75 a month. That puts your total expenses at around $3,215. You might also include management fees if you're hiring it out, 10 to 20% of rent. Vacancy reserves, budget 1 month a year or 8%. Number 3, calculate your net cash flow. Now subtract your total monthly expenses from your projected income. $3,600 minus $3,215 equals $385 a month net cash flow. Not groundbreaking, but solid, especially if you're self-managing or offsetting tax liabilities. And again, this is conservative. If your rent ends up being $3,800 or you get a long-term guest that covers 2 full quarters, your profit goes up and your expenses go down. Number 4, analyze your cash on cash return. Now let's calculate your ROI. Let's assume your purchase price is $450,000. You have a down payment of 20%, so $90,000. Closing costs roughly $10,000 and furnishing setup about $15,000. Total cash invested $115,000. So your annual cash flow, $385 times 12 is $4620. Cash on cash return is your $4620 divided by $115,000 equals 4%. That might sound low, but remember this is net, conservative, and nearly hands-off income. Most long-term rentals in Phoenix right now are cash flowing $100 to $200 a month with similar investment. STRs are dropping in performance unless you're in the top 10% of listings. Midterm rentals give you a better balance of cash flow, lower time investment, and tenant quality. Step 5, look for upside. Ask yourself, can I furnish it affordably but nicely to boost demand? Can I target a high demand pocket near a hospital, corporate headquarters, or construction corridors? Can I reduce costs by self-managing or outsourcing only a portion? Can I build partnerships with insurance companies, staffing agents, or relocation coordinators? Even a $200 a month income increase could shift your return from 4% to 6%. That's huge when it's scaled across a portfolio. Now, step 6, run a what if stress test. Always run downside scenarios. What if your rent is only $3,200 a month? What if you have one vacant month per year? What if your expenses are $250 a month higher than expected? Will the deal still cash flow even if things don't go perfectly? If the answer is yes, you've got a solid recession resilient investment. Shifting your STR to MTR when it makes sense. Now let's talk to the STR owners out there who are struggling. If you already own an Airbnb in Phoenix and you're noticing bookings are down, your calendar is empty in the off season, you're tired of the nonstop messaging, turnover, and supply runs, your reviews are slipping, or your pricing power is shrinking because of saturation, then pivoting to an MTR may be your best next move. It's not giving up, it's repositioning the asset. You already have a furnished property. You're just shifting your marketing and a guest strategy to a longer stay, lower maintenance model. And in Phoenix, that pivot is working. But let's be honest, it is still a business. I want to be clear, just because midterm rentals are easier than STRs doesn't mean they're passive. What I offer as a realtor plus MTR manager, I don't just help my clients buy MTR ready properties, I manage them too. I'm a licensed real estate advisor in Phoenix who knows how to find deals that make sense for this model. And I'm also a management partner who handles everything post-close. That includes setup, design and furnishings, utility and internet setup, listing creation on Airbnb, Furnished Finder, and more, lease agreements and guest vetting, cleaner coordination and in-stay support, turnover and restocking, emergency response and vendor management, and ongoing income and performance reporting. In other words, I help you invest smart and keep your time. Whether you're pivoting your STR into an MTR or buying your first property specifically for this strategy, I can be your boots on the ground partner to get it performing without you having to do everything yourself. If you want help analyzing a midterm rental deal, whether it's a property you own or one you're considering buying, just DM me MTR Analyzer or text me and we'll walk through the numbers together. We'll look at your income potential, expenses, lease setup, demand, and what kind of return you can realistically expect. You don't have to figure this out alone, and you don't have to manage it alone either. And in the next video, I'm walking you through how to set up a midterm rental the right way, from furnishings and supplies to listing and onboarding your first guest. Make sure you subscribe, and I'll see you in the next video.